Okay, let's talk about check registers. Why, oh why do you need a check register? So this is something that's been around a long time. Not many people use it. I only started using it probably a year ago, maybe a little more than that. But essentially, you want to track your own record of how much money is in your checking account, your primary account for your transactions. So many transactions with different institutions, whether they be money coming on the way in or money going out, will take several days to settle, meaning between the time you kind of act on it and when it appears in your account finalized, a few days could go by, a few business days. When you factor in holidays and weekends, this could mean 4 or 5 days over which things take to appear. So the idea of this is keeping your own history of what's happening in your account and then making sure you can confirm it against what you see at the bank. So you're looking for errors, but you're also using this, as we'll see, as a way to, in this form anyway, characterize different categories of spending, both things that are on the way into the account and the way out of the account. So we'll look at different categorization. And then we'll also look at different ways to set budgets for different items. Maybe these are things you have as regular spending, or maybe different events. Maybe you're planning for a vacation or planning renovations for a house or something like that. Any of the above, things that kind of need to be tracked against your balance, and we'll see what that looks like. So this is a way I'll show you to do this digitally. You could do the same thing on paper. I'll put a link to this template down in the description here, but it's pretty much the same as the template. I made a few adjustments that we'll see, but free online. This is a Google Sheets version, but they have an Excel one as well. So let's get going here. So first thing you'll do is at the beginning, we'll see we need to kind of pull in our opening balance. This is kind of the starting point where we know we have agreement with the bank on what the balance is. So way to do this, I would just pull your most recent checking account statement and put that number over here on the right side of your register. So for simplicity's sake, I'll say that the most recent month ended with $1,000 as the balance. So we'll just leave that here. We can fill in the date if we want to just, pick a number, whatever it may be. We would fill that in here. And actually, in reality, this would be kind of probably end of the month. So we'll do something like that. And then I'll set the date, right? So I have this, I think set to format. No, I don't. Okay, well, anyway, you'll set your date there. And that's a transaction. So we can fix that later, but I think the date format's best if you have the full item there, but we'll come back to that later. So this is just an opening line item. It's not an actual entry, so to speak, in the register. It's just kind of the opening point where we know we have agreement with the bank. So before we move on, the next thing I'm going to do is down at the bottom here, we have different categories. So when we think about all the categories of spending that might show up on the check register, we'll enter those here. So feel free to add to this list, and they'll automatically get added to the list in the main view and be made available. But these are just some ones that I've identified. And remember, this is both money on the way in and money on the way out of your account. So I have kind of credit cards accounted for here. If you have a direct deposit, payroll is kind of some of the main items. Really anything that could appear, we want to account for here, so that our pivot looks good later, and we'll see that in a report. So assuming that's good, we'll go back to the main screen. And then let's say we have an entry, we got a paycheck, and we can call this payroll, Acme, whatever. And then we can put the confirmation number, whatever that may be, just so we have good records of this. And we can put today's date. So we'll put that there. And we can set a category. So the way I have this set up, you can either type it or just enter it there. But you want to make sure it does match one of your categories. If I put something random, it's gonna give me an error there. So if you see our little red invalid check, you'll know you want to adjust that to make sure it's fits into a category. This R column is to make sure you've reconciled this or matched this up back to your bank. So if you log into your bank on the mobile app or the website or whatever it may be, if you see a finished entry for this and this does match, we'll put kind of a letter there to signify that that's happened. Because this adds to the account, let's say it's $1,500, I'll enter that on the deposit or plus side, and you'll see that the current balance has increased by that much, and that is our current expected balance. So we'll leave this withdrawal one blank. We're only going to use one of the two columns here for each line item. So that's how that works. Now let's say someone tells me they're going to pay me for something, and maybe they haven't sent a check yet or something. If we're still using checks, we can say this is a check that we're going to receive. We'll put, the date of when they told us about this. Let's say it's also today, and we can call this maybe it's reimbursement for something. So we won't put the R there because maybe we haven't received it yet, and maybe it's $100. We can see that that'll move our balance up, but maybe this hasn't showed up at the bank yet. So this is just our way of tracking this, that we expect this, but it hasn't appeared yet. So we'll leave this empty because we haven't confirmed yet that we've received this and gotten it. So a few more example transactions. Let's say we have one for rent, and we put that as such, rent category. Let's say, whatever rent may be, and that'll deduct from our balance. And again, you can kind of see this is a running balance automatically calculated. And we'll also leave that blank until it is charged by the institution and we see it show up in the account. So those are a few example line items. Now let's say we have a new entry. So this will be a different type. I'm going to call this one vacation. So let's highlight this, let's pick a color. So this is a different type of entry. So this means there's no actual spending happening in the account, but let's say I want to hold money aside. So this is a good way to kind of keep a running budget or sort of a separate balance that I keep for my own records. So I'm going to put this as kind of cushion because we're giving ourselves a cushion kind of for the future. And let's say I take, $500 out. So what I've just done here is set aside $500 for myself. So you'll see this balance won't actually match the bank balance perfectly. because this is something we've accounted for and the bank hasn't accounted for, you're not going to have an exact match here. But going forward, if you take the amounts that you've set aside for vacation or whatever it may be, and you add that back into your current balance, it should match what you see with the bank. So we're getting close, but not matching exactly what the bank has. So, maybe in the future I have a different one where I set aside for insurance, and maybe I also put $500 aside for when that comes due. And again, I'm using colors here because I want to draw my eye to the fact that these are not transactions that I'm going to see at the bank. These are my own transactions that I've set aside. So those are a few examples there. So because these are things I've created, I'm just going to put an R there because I know they're done and I've accounted for them. They're not going to show up at the bank. If I went to check this and update it a few days from now, I would look back and say, okay, well, let's see the ones that aren't accounted for, these two empty lines. And I would want to make sure that they've now since appeared at the bank, or I would reach out to check with those institutions. Hey, you didn't charge my rent, or hey, this check didn't show up. You said it was on the way. So, those are things you'd want to check and make sure you had confirmation. So after some time, you'll have a bunch of transactions that add up, and you can go and switch over to, say, the pivot category, and we'll see this is a pivot table here that shows each of the different categories of spending or income, and we'll have kind of a summary view of each of those. You can kind of edit this pivot table as you like or add to it, but this kind of basic structure gives you an idea of grand totals in, grand totals out, and per category. So this is nice to kind of see what you spent over the course of a season or over a whole year for planning purposes, or just for your own records. So let's say, back on the main page here, a few events go by, and let's say we're now ready to take the vacation, and we can assume there's a few other entries here. But let's say it's time to take the vacation, and I should have done this first. I'm just going to put a little record so I can see at a glance what I've done here. So I'm saying this has gone from 0 in the vacation balance to 500. If I'd already had the 500 in there, I would have said 500 to 1,000 in this case, because it's a $500 entry. So I'll make a new entry later on that says something like vacation 500 to 0. And now what I'm doing is I'm drawing down against this money I've set aside. And remember, this is only money that we know about. The bank doesn't know you've kind of said, this is for your own records, right? They don't know you've said, oh, I'm keeping $500 for vacation. The point is just to watch your balance and keep it, ideally above 0, but keep it at a level where you can save for this vacation and not draw down against it yet. So, and I'll come back to that 0 or below 0 point in a minute. But once I've used this vacation allowance, I'm giving myself a deposit of 500. So then, let's say it's part of a credit card. Just for simplicity, I'll say it's the only thing on the credit card that month. So I'll do it this way, and I'll say, okay, we paid our credit card off for $500. So notice that the balance here is exactly where it was before. And that's because we saved ahead of time in our vacation balance, and then we drew down against it later to pay off this credit card charge. So what that does for us is it allows us to set money aside that we now don't have to think about, and we don't, when looking at our bank account or bank app or website or whatnot, you don't kind of get confused with one number and have to divide apart what's in that number, right? Because within that balance at the bank, you have money that's set aside to pay bills, that's accounted for in kind of living expenses, but then also your vacation money you've set aside, plus maybe some other project around your house. So if these are all kind of represented in one number, it can be tricky to remember what you set aside, whether you've set aside enough, maybe too much. But this is kind of a separate record outside the bank as a way to track those items. So this is back to zero. No more vacation money, but we can just carry on and know where we are. Now, something important to think about here. Let's say we hadn't yet done this vacation, and we're going to just clear all this. What I want to point out is that right now we've put two things aside for two of our budgets. We have a $500 vacation budget and $500 insurance budget. So the balance only shows $800 now, which means we have kind of $800 left to allocate to other bills or to spend or whatnot. It's important to remember that this is not what you'll actually see at the bank. Let's assume we got this check from our friend and our building charged the rent, so we're all up to date with everything that we know about. We would expect our account at the bank to show $800 or $1,800 at this point. That's everything they know about and is accounted for. In our view of the world here, we see $800 because we know we've set aside money for these special purposes, vacation and a future insurance payment that we have to make. So in thinking along those lines, we know that we've saved some money for ourselves for certain purposes in the future that we could draw down on. And we know that this balance is kind of the effective balance of what's left. So I say that because let's say we made a credit card payment that was $800. We put that entry in here. We'll now see that we have $0 left. It's like, well, oh boy. Let's say it's even $850. Now we have a negative $50 balance. That doesn't mean we actually have negative 50 at the bank. We obviously want to watch this closely because we don't want to overdraw on the account. But the point is, you have a little more than what you see here once you start using these budgets, these budgets to save for the future. So remember back to kind of what we said earlier. If we're kind of wondering where things stand, we can add the balances of what we have saved to the current amount, and that's what we'd expect to see. So in this case, if I added this 1,000 to this negative 50, I would expect to see $950 at the bank. So once in a while, you'll need to look at that and think through it. I like to just kind of check and make sure it's right each time, but you'll want to make sure you're reconciled. So that's really it for the register. I think each year it's good to make a new one, start fresh, maybe even more often than that if you like. But looking back to the pivot view here, you can kind of see what you've set aside for different items and categories, and do that as your practice. So how often do you want to update this? I would say maybe be monthly, maybe more often than that. The point is that you have a good track of what's going on. You certainly don't want transactions that you make and then forget to enter here and that don't show up on your bank account, right? That'd be the worst, because then it's something unaccounted for. That's an error. So being able to track it here is kind of your definitive record and something that you can compare against other accounts. Something else to think about, if you invest anything outside of this account, it's not really money you're paying away to someone else, but you are transferring it out of this account. So if, for example, I make an investment, whatever account it may be, Fidelity, brokerage, whatever, I am going to put that in the withdraw category. So that would go in this column, and it's still your money, right? It goes to Fidelity and whatnot, but it does come out of the checking account. So that would go in the withdrawal column. Something to think about there. So again, the link to this whole template is down in the notes. That kind of wraps it for this topic. I did add the categories view and validation here and the pivot. So I will put the link to this version as well down in the notes. Otherwise, let me know if you have questions. Thanks.